Yo, my people, in this video I'm going to usher you to the smart money concepts or ultimate guide to smart money concepts. As I always tell my students, before big institutions place their sales and buys, they always consider three factors. These factors are very important. There's no way you successful skipping one of these three factors. Yeah, so these factors has to do with market structure. Yeah, market structure is a basic which every trader is supposed to master at his or her fingertips. If you're a trader and you don't know what market structure is, there's no way you could be successful in these markets. Yeah, so market structure is a basic or fundamental knowledge for every trader to know. In considering market structure, what you are supposed to do as trader is to analyze the charts and look for the overall market direction on the higher time frame before you confirm it on the smaller time frame, then you enter your positions. So I'm going to take you to the charts and then show you how to implement market structure analysis on the bigger time frame and confirm it on the smaller time frame. All right, now we are on the charts. We are in a US dollar Japanese yen market, and then considering this trend in 7 January, market was bearish, meaning Japanese yen was very stronger than the US dollar, and it got to a discounted level at a price of 103.473, then got rejected at this discounted level, then later on went bullish and got rejected at this level of interest, then got bearish and then came and cleared sell side liquidity down below, went bullish with full force, meaning there's a huge volume in the bullish trend. After that, it went bullish and got rejected at the previous highs at price level of 115.670. That means sales were strong here. In other words, this was our psychological level where sell orders were huge. So as soon as price got to this point of interest level, price decided to be bearish up to this point of interest. Then after that went bullish, and therefore price is currently at this price level, which is 115.6376. Yeah, so don't forget we are working on 4-hour time frame. As you can see, meaning each candle takes 4 hours to form. So currently we are in a bullish market. This is our current trend, which epitomizes that buyers are in control. As you can see, this very candle, buyers are pushing price after sellers push it downward. Now, before you enter trade, you have to zoom in to smaller time frame. This is 1 hour. So the overall market direction is bullish. Buyers are still in control. 30 minutes time frame. Yeah, from this discounted level to the top here, the overall trend is bullish. Yeah, 15-minute time frame. So the trend is bullish. Our current trend is bullish. That doesn't mean we should enter our buy positions. No, because examining on the higher time frame, price is almost at the premium level, and we always sell at the premium level to maximize profits and then buy at the discounted level to maximize profits. So when price is currently, it is not advisable to enter any position yet unless we have a confirmation that price has to come to this previous high to clear it. Or aside that, price has to clear the old high at this level, which is 115.679, and also to form double tops formation to serve as a strong confluence that price will be bearish. That is where we'll be looking for ourselves. Yes, so for now it is not conducive to enter trades because there's no confirmation that price will be bearish. Though price is currently at a bearish engulfed order block level, but to be safe and have 100% assurance, you must wait for price to clear the old height here and also form double top formation. Then that is the high probability level for you to enter your sales. Yes, so that is one aspect of market structure. Before you buy, you must consider the overall market direction. So once you identify the overall market direction, the next thing you are supposed to do is to look for your liquidity. We have two major types of liquidity in the markets. We have internal liquidity, let me indicate it at once, and external liquidity. Yeah, internal and external range liquidity. That's the next thing big institutions look for in the markets. When we say liquidity, we are talking about voids, imbalances, OB, equal lows and equal highs, FVG, and so on. In my subsequent videos, I'm going to go into details and various examples of internal and external range liquidity we have. So right now I'm going to take you to the market and show you how to locate liquidity. After it has cleared the old highs
At the premium level, it started to be bearish to the discounted level.
after that, it went bullish a little bit, got rejected at the point of interest level. They came down. As came down here, there was a sell side liquidity here. This was relative double bottoms formation or relative equal lows formation here. Then price went bullish. So the liquidity which was here is a relative old lows or relative double bottom. Now let's look at another
Case study.
yeah. As price got to this level, price got rejected at the premium level here, which was 115.685 exchange rate. As it got rejected at this level, it made a little bit swing low and then went bullish a bit for a little retracement and got rejected at the bearish order block, and this bearish order block was traded into a bit. You can use your Fibonacci to know the level it's traded into. Looking at it carefully, it traded into the order block at 61.8 price level. Then after that, it made a little bit swing low, then went and cleared buy side liquidity at the top here, and also form double top formation, which serve as a strong confluence that price will be bearish, and indeed price went bearish to the discounted price level. This means there was so much liquidity at the premium level here. Then price made heavy swing low all the way to the discounted price level. Looking at the momentum candlestick here, you see its volume was so huge. Minister orders were very huge. Yeah. As price came to the discounted price level, it made swing high a bit to this point of interest and then came down a bit, got rejected, then came down a bit and traded into a bullish order block. Then when bullish and played, old highs at this psychological level, got rejected, came down for a retest, then finally went high, got rejected at this point of interest level, which was our bearish order block zone, then came down. So you will see price always reacts at where liquidity is. Therefore, big institutions always place their sells and buys at the major points of interest levels where liquidity is. Yeah, that's how it is, my people. What you must take into consideration is always wait for price to clear sell side liquidity before you buy, and also wait for price to clear buy side liquidity before you sell. Very, very important. Our sell side liquidity is always at a discounted price level, and buy side liquidity is always at the premium level. So before you enter trade using smart money concepts, always wait for price to clear sell side liquidity and buy side liquidity before you enter trades. Yeah, so let's get to our third smart money concept, which has to do with entries. Yeah, so we have our entries here. That is our final smart money concept. Very, very important. Some people enter trades on 15-minute time frame, others 5 minutes, some 1 minute time frame. It's optional, it's never the same. So various entry time frames varies from trader to trader. It's never the same. So I'm going to take you to the chart and then show you various entry price time frames we have. Yeah. Looking on the chart, currently we have 15-minute time frame. So if you want to enter trade at this price level, then you have to wait for this first bullish candle to finish forming. Immediately after it has formed, then you enter your buys. Let's look at another
Case study.
Yeah, assume you want to enter sales here on 15-minute time frame. As you can see, this is our 15-minute time frame. You just wait for this very candle to clear buy side liquidity at the premium here, though price didn't clear the liquidity in total. It got rejected on the way, then made a swing low. So if that's the case, by all means, when you enter your sales here, your stop loss would have been above the high here, meaning as you entered your sales here and later on price made a retest, by all means, it will not come for your stop loss. So this is the ideal time, 15-minute time frame to enter your position is just after store liquidity got cleared, then you enter, you place your stop loss at the top, then you leave it. And at the discounted price level, price got rejected at the relative teaser bottom. These two candles were our relative teaser bottom. So immediately you spot relative teaser bottom formation, then that would be the ideal time for you to start looking for your buys. That's how it is. So 5 minute time frame, which means each candle takes 5 minutes to form. Yeah, so looking at the premium level, there was a strong confluence at the top. First, price cleared buy side liquidity at the top here, and then made a retest form double top formation, then be bearish. So entry levels are optional. they are never the same. It varies from trader to trader. Yeah, some also enter on 1 minute time frame. It's a 1 minute time frame, which is ideal for scalping. So my people, that's it. Don't forget, smart money concepts always take into consideration market structure. After you identify the overall trend, then you look for liquidity and wait for price to clear liquidity levels. Then you start looking for your sells and buys. Yeah, there's no way I will conclude this tutorial without talking about forex abbreviations. These forex abbreviations that I'm going to discuss with you are very, very important. We always use them on our charts when doing analysis. The first one has to do with LOI, which stands for level of interest. The second one has to do with ZOI, which stands for zones of interest. The third one on the list has to do with POI, which stands for point of interest. Yeah. We also have CP, which stands for clearing participants. Yeah. The next on the list has to do with ICT, inner circle trader. Yeah. We again have FV, which stands for fair value. Also, we again have FVG, meaning fair value gap. The next on the list, BMS, which stands for break in market structure. In other words, you can also say break of market structure. You also have PO, meaning pending orders. You also have MB, which stands for mitigation breaker. We also have SSL for sell side liquidity. We have BSL as the next one as buy side liquidity. The abbreviations are really many, but I'll just limit myself to the advanced ones. The continuation of it is PDA, which simply means premium discounts array. Yeah. The next one is OL, which is old lows. We have OH as the next one, meaning old highs. We again have what we called OB, meaning order blocks, which is a very high effective strategy professional traders deploy to trade the markets. We also have FMV, meaning fair market value. Very simple, my people. We also have EL, standing for equal lows. Yeah. We also have EH as equal highs. Yeah, my people. So these are some of the few advanced abbreviations that we have so far as forex markets is concerned. On this note, I would like to sign out here. See you in my next video. I love you all. Bye bye.